Want to borrow more against your home, but your current lender's told you no? Feeling disappointed, frustrated, or just simply annoyed, and all you need is a little bit more of a flexible approach to your circumstances. Hi, I'm Jenny from Your Mortgage Hub, and I'm here to help those starting out or starting over with their mortgage applications by showing what you should and shouldn't be doing when it comes to applying for a mortgage. So, I had a client who came to me who had just recently had some adverse credit appear on their credit file through no fault of their own, or so they thought. And she went direct to her current lender and was simply told, no, sorry, we won't lend you any more money, which, as you can imagine, is really frustrating because the money sat there and they can afford it. And then this adverse credit had to sort of appeared. Now, the lender had said you can continue making your normal monthly payments for your mortgage. We'll continue to service that, but we won't borrow you any more money. So she came to me and was really, as I say, frustrated and quite upset by it, to be fair, and was like, look, just transfer me away from them, find me another lender, and I'll just remortgage the lot and borrow some extra money. So after having that conversation with her, I explained that actually maybe that's not the right thing to do. As annoyed you are with your current lender, that's probably not going to be cost effective. So after getting a credit file and having a look at that, I was able to confirm that actually taking a second charge would be a better option. Now, a second charge is when you leave your current mortgage exactly where it is, and you will have a second lender that will secure some funds against your property, and you'll make those monthly payments. That means that there's no early repayment charges for coming out of a product with your current lender. It means that you are paying a higher rate for the whole of your mortgage. You're only paying a higher rate maybe for the second charge part of it. And then in the future, once your credit file's improved, or if it was sort of your income that needed to be improved, then what we can do is we can look to remortgage that all back into your current mortgage and make it one manageable payment for yourself. So after having that discussion, she absolutely jumped at the chance. Once we'd got all the full documents in, I believe the funds were released within about a week to 10 days. So it can actually also be really super quick, which meant my client could go and complete those home improvements and pay off that small debt she was looking to pay off. So there's three main things that a second charge can offer you that maybe your first charge or current lender can't. The first one is can be a bit more flexible around its criteria in regards to maybe adverse credit or maybe how your income is paid. So some first charge lenders can actually be quite strict in what they would accept, whereas the second charge lender has a little bit more flexibility around that and can consider maybe a little bit more adverse than what your first one can. Number two, it can be more cost effective, and it can be more cost effective for two reasons. One, you may not have any early repayment charges to repay because you're not moving your current mortgage away. You're simply getting a second one that's going to lend you some more money. And number two, if we are having to go to a lender that's got a higher rate, you're only paying the higher rate for that portion of the extra borrowing and not for your full loan amount. Number three, taking a second charge can be for any legal entity. So when I say any legal entity, it could be home improvements or debt consolidation, which most lenders will do. But it could also be to set up a business or buy a holiday home in Spain or even pay a tax bill. So again, they can have that more flexible approach about what you're allowed to spend that money on. So to recap, the three things that a second charge can offer you that maybe a first charge can't is one, a bit more flexible around your adverse or your income stream. Number two, it can be more cost effective than remortgaging the whole balance away and paying early repayment charges and maybe a higher interest rate on the full balance. And number three, it can be for any legal entity. So you can even pay your tax bill with it if you wanted to. So if you're looking to borrow some more money and your circumstances have recently changed, drop me a comment below and I can see if a second charge is right for you. If you want more hints and tips on what you should and shouldn't be doing when it comes to applying for a mortgage, just go and check out my page. And for a no-cost credit file option from the three major agencies that lenders use, just drop me a comment below and I'll send you a link over.